Welcome back to part 2 of my videos around Lunar Classic, and in this video we're talking particularly about the Ustc revitalization plan that is coming out, incremental taxes, and ultimately supporting the algorithmic nature which gives us our real world utility back for Terra Lunar Classic. Could be absolutely insane. People genuinely believe the repegging of Ustc is the one giant catalyst to really propel Terra Lunar Classic. So we'll take a look at it all in this video, as well as some action on the price. So let's get across there and see what is going on. So here is the Ustc price. You can see on a nice little run in the last hour after that sell off at $2 cents, 1.27% up on the day. Now, firstly, we need to understand exactly what the algorithmic stablecoin is. So algorithm can be an obfuscating word, but it simply means a set of code that instructs a process. So for example, what you get to see on your Facebook timeline is determined by the Facebook's timeline algorithm, which include times like how relevant the post is based on your past online behavior. In crypto, an algorithm refers to pieces of code on the blockchain as encoded in a set of smart contracts, i.e. sell at this point, buy at this point, maintain this number, sell to this number, etc. Cryptocurrency is similar to assets in the market, such as houses or stocks, move up and down in price depending on the market and depending on the demand of supply. This also includes stablecoins because they essentially are cryptocurrencies freely traded on the market. To prevent the price of a stable depegging moving away from $1 while subject to market conditions, algorithms regulate supply and demand. When there's too much demand for an asset but little supply of it, the price of that asset goes up, and vice versa. The algorithm's promise is to keep that in check as we explore the context of UST in the next section before delivering deeper into how that can go wrong. So ultimately, as people buy USTC, what should happen in order to maintain the peg is that Terra Lunar Classic is minted to then bring the two numbers back together. And that's obviously what went wrong when we saw the collapse of it. Now, why is this important for Terra Lunar Classic? Well, when we talk about bringing back utility, the biggest utility that Lunar Classic had was USTC. Now, there have been a couple of proposals thrown out there. This one really caught my eye in terms of how it's been thought through. And ultimately, and again, I'm not a coder, so, absolute transparency to this, but it does kind of makes some sort of sense to me, and more importantly feels like this could be implemented relatively quick. Now, I'm not going to go through the full article. I will link this in the description so you can come over and have a look at it. Likewise, I'll link part 1 to this video as well down in the description so you can go back and check, and where we talk about the refunding the Terra Lunar Classic holders at 296 million coins. So ultimately, what have we got here? Well, USTC revitalization and the incremental peg to $1. It's important that reference, incremental peg to $1, through the implementation of a peg divergence tax on transactions both on and off chain. So it gives us a bit of a summary of exactly what's happened. If you don't know what happened with Terra Lunar Classic, I suggest you go and kind of have a look at it. I'm not going to talk back through it in this video. Specifically, I want to talk about repegging USTC. Now, the peg diversion tax works by by taxing slightly more than the spread, the difference between the selling price and the peg price. The tax retained by the protocol are then used to buy back USTC to maintain the peg. So think about what we talked about at the very start. In the beginning, the tax is always on the seller side to incentivize buying, and it always accumulates the more desirable asset. Now, there's two important things here. A, that version 1.0.5 where we upgrade the network, and ultimately that reimbursement of having that code that we don't have to go to Therebles to implement. This can be implemented through a governance vote by the community, and I think it's important to reference. So it's in the to work, it needs to be applied to both on and off chain transactions, and at the beginning, the depeg events may occur until the protocol has returned enough assets to buy back to the set peg. That is the one sticking plaster. Do we get centralized exchanges to support this position? Now, we could launch it on chain in the Terra on our own blockchain, but we obviously want those exchanges to support us. Now, it goes into exactly how the mathematics would ultimately work, but the example best is here, where the price is below $1. Ultimately, what would happen is that the X were at $1 and the 9 at 99 cents. The median in between would go to 1.1. which ultimately then gives us 0.11 in terms of a tax. The seller creates a sell order at 99 cents, buyer pays 99 BUSD, the seller receives 979 BUSD, the protocol retains that 0.011 BUSD that ultimately then will go into the pool to support the peg. Really interesting concept when you think about it. So what is the implementation? It's a 4-step process. Phase 1, we repeg USTC to around its current market value, gives instant utility to the network by showing dApps to immediately begin selling services products on the Terra network in USD values. Again, another point that I think is worth noting, that this brings applications back. We have to burn supply, but we have to do it by building out as well as the continuation of burning that supply. It says we start the incremental pullback to $1. So this isn't going to be, okay, well, tomorrow USD is going to be $1 and let's just see what happens. It's not realistic. This way it does an incremental step up. So if it goes wrong, it's only a minor problem. It says what this does allow is the price to deviate above peg, but not below. And as the price of UST increases, we repeg an incrementally higher values until we reach $1. The incremental peg makes USDC more desirable than any other stablecoin. Again, if you think about it, you're going to buy it at 2 cents and potentially it would be going back to $1. Phase 3, use USTC obtained by the protocol during the buyback to provide a liquidity pool in which would allow undirectional LUNC to USDC swaps without any minting. This serves to reduce LUNC supply without increasing UST supply. Again, another important point. And phase 4, once we've reached the $1 USDC, we relax the algorithm parameters to allow for limited arbitrage to occur again to increase until further notice. The algorithm is not switched off, it's just lying dormant. So if it was to ever happen again, it would give us the opportunity. Now, I genuinely believe that if we do land this protocol, it wouldn't happen again. I don't believe it. We already know that FTX had an element to do with it, if not 100% all of it to do with it. So it's a very interesting concept and ultimately takes away that potential of another further depeg and brings us the biggest utility that Terra Luna Classic has. There's a case study there, Binance BUSD to USDC trading last quarter. It gives you an example of exactly what the fees potential look like. And in conclusion, it says, given that we are going to whitelist Binance wallets, I believe we should capitalize on the close relationship and be the first blockchain to have their capital controls implemented algorithmically both on and off chain. But this is not a utility and should be viewed as such in more of a fail safe. This approach should appeal to both USDC and LUNC holders alike and allow us to slowly but safely collateralize the USTC and BUSD. It doesn't require any minting and doesn't require any funds out of the Oracle or community pool. The only negative we can see is it will have a dramatic reduction on trading levels below the peg, and if the markets react badly and without the correct on-chain utilities to drive demand, it could result in stale or no trading. And if there isn't sufficient demand at or above the peg, you'll need to sell. You will be taxed quite aggressively off ramping. So again, this is a point of discussion that I think is definitely worthwhile the community thinking about, and ultimately it does and is a part in which we can bring utility, a major utility, not in the space, back for Luna Classic. There is another couple of Repeg proposals. If you wanted me to go through more Repeg proposals and kind of just talk through and do a whole video on what is out there right now, leave a comment down below and I'll definitely do that if you guys want it. Also leave a like on the video. If we can get to 100 likes, I'll go through the Repeg videos. This one's quite long, 7 minutes, nearly 8 minutes long for this video, but you got to think the Repeg is a huge statement of intent, and likewise if we land this on Luna Classic, it is a massive catalyst not only to Luna Classic holders but ultimately those people that bought into USTC. We can and do see USTC every now and then really starts to move up with some severe volume and some big aggressive price action. People want this to succeed, in my opinion. So whenever we have a proposal like this, it's important that we understand them and share them with everybody out there. As ever, thank you so much. Don't forget to go watch part 1 to this video all about that refund of Terra Luna Classic. Don't forget to subscribe to the channel, leave a like if you liked it, and I'll see you guys in the next video. Take care. Bye-bye.